It's time to bring in Tom Keene, Bloomberg Editor at Large and host of Surveillance on Bloomberg Radio. Tom, what is on your radar today?
Ellen Braitman was just talking about it. This move in the yields off of Friday's jobs report was just really remarkable when you see, the 10-year, the most elastic part of the curve, the 2-year. I love what Dennis Gartman says. Here's what he says, folks. You're going to love this. We shall mince no words here. This is not going to happen. He's talking, of course, about Bernanke's conundrum. We'll have much more.
Time now, as promised, for Tom Keene, Bloomberg Editor at Large and host of Bloomberg Surveillance. We're seeing higher yields and note prices lower off that Friday jobs report. Sustainability, I guess, one of the questions being asked.
It's fascinating. You see it in the last half hour of your broadcast, John, the idea from Ellen Braitman of the yield market and how it plays into central bank policy. And then you hear there from Dr. Lipsky that sort of canary, that idea that's out there a couple years of a threat to the dollar as the dominant global currency. A little bit of notes over the weekend. The 2-year yield, the move was absolutely remarkable on Friday. We had the jobs report. David Malpass makes no bones about it. A good headline, but weakness underneath, and then off we go with the 2-year. There it is. Look at that. It's a 4-deviation move. All you got to know is that's a rare event. You've got the stability there coming off of the recent months and months, tight trading range around 0.9 to 1%, and then up we go to 1.35%, a real spike there. Derek Halpenny at Bank of Tokyo Mitsubishi making real clear this is not going to sustain. He doesn't look for permanent higher yields here.
Are you hearing anything about when we might hear from the Fed on what its views are, whether it's going to be...
Yeah, I haven't seen a single note over the weekend that suggests the Fed will act by December. December Eurodollar futures popped about 35, 38 basis points. When I spoke earlier, I mentioned Dennis Gartman saying, we'll mince no words. This is not going to happen. Malpass agrees, Halpenny agrees, and even those optimistic, they don't agree that the Fed will become restrictive anytime soon.
Any thoughts on how a lack of, say, change in interest rate policy, what that means for the greenback or other currencies as well?
Well, they're definitely linked in. There's no question that short interest rates, and particularly inflation-adjusted interest rates, matter. If you get a higher yield, that attracts funds in. You get a stronger dollar. But I would be very careful here, because if you look at the dollar weakness recently, this move up has been it's been a good time in coming. We're going to continue this on my program today. Neil Sass will join us from Credit Suisse. And speaking of the BRIC nations, Jim O'Neill will join us from Goldman Sachs.
All right, we'll look forward to it, Tom.
Sure.
Thanks as always.